As the coronavirus continues to spread throughout the U.S., most people are working from home and not commuting. That means fewer cars on the road, fewer accidents, fewer insurance claims.
I can't believe how easy it was to save hundreds of dollars on my car insurance with Geico.
But consumer advocates say many insurance companies are set to reap big profits from COVID-19.
So all the auto insurers are going to make a lot of money off of this.
Bob Hunter is the former insurance commissioner of Texas and speaking on behalf of the Consumer Federation of America.
But suddenly, you're not driving at all. And so you're much less of a risk. And therefore, the premiums have become excessive. And that's illegal in every state.
And he says home insurance is also overpriced because risk has dropped there too.
A little fire that breaks out from a plug is going to be, you're going to catch that, whereas before it might burn your whole house down because you're all at work.
So this week, he and the Federation wrote the nation's insurance commissioners, asking them to step in and also trying to get help for the most economically vulnerable. With millions more unemployed, they're calling for a temporary moratorium on insurers' ability to use falling credit scores to set the price of insurance.
For people who are going to lose their jobs and have other kinds of trauma, their premiums are going to rise because of credit.
47 out of 50 states allow insurance companies to use credit scores to determine how much you pay. But Hunter says it's not appropriate to hike rates during the global health emergency.
Your premium will go up at the very time you're much less risky. It makes no sense. That's price gouging, almost a classic definition.
I don't think that's fair. I just think that is corporations taking advantage of a sad situation.
Felicia Lee Sexton is a trainer shut out from her all-women's gym in Houston, where the bills are still coming due.
My rent at my gym is right at $5,000. So there is nothing I can do about it.
Sexton is working on video now for 50% off and says there's no room in her budget to overpay for insurance.
Even if they add, $5 or $10 onto your insurance, that's $5 or $10 I can get some milk or some bread with.
But the Consumer Federation of America says consumers could be due hundreds of dollars in discounts individually and billions as a group, money that could make a real difference. We reached out to 6 of the nation's top insurers. The only response? From State Farm. We do not have anything to share on this topic at this time. They forwarded us to an industry association.
We have been around for over 300 years as an industry. We want to make sure that we're around for 300 more.
The Insurance Information Institute told us insurers are doing plenty, like offering struggling consumers the ability to delay paying premiums. So we asked about new guidance just out from state regulators like the Insurance Commissioner of Pennsylvania, who urges consumers to consider current circumstances when applying common discounts, such as low mileage rates for policyholders that no longer drive significant distances. And the regulator also asked insurers to review their use of credit scores during the crisis.
What can you tell me right now today that insurers are doing to respond to that request?
Absolutely. The insurers are looking at all solutions possible.
There's no single major insurer that you could name to me today that would postpone the use of credit scores just during this world pandemic.
I cannot name you an insurer that will do that at this point.
My message would be, first of all, to those that I call the powers that be, stop being greedy. Stop taking advantage of a bad situation.
Mark Greenblatt, Newsy, outside Washington, D.C.